You're tuning into Clearing Spotlight, where markets meet clarity and institutions navigate liquidity, risk, and infrastructure. Today, another reputable guest has graced our show to share her expertise in the crypto industry. It's my great honor to introduce to you Brooke Rizzetto, head of EMEA Derivatives Sales. Welcome, Brooke. How are you today?
Thanks, Sean. Very excited to be here. Doing well. How are you?
Good. Thank you very much. It's great to have you on to get your insights. To start with, we'd like to talk about crypto market structure. Of course, it's very relevant with Coinbase and what's gone on, kind of recently. Historical context is you started as a spot exchange, then the evolution of futures, perps, as they're called. Now with the purchase of derivative options, you have this kind of suite of products, across all of the, the suite. How do you see the interplay between spot derivatives and options liquidity evolving over the next 2 to 3 years?
Yeah, so our goal is for Coinbase to really be the single point of entry, store collateral, and have it recognized as the one marketplace for all of this. I think what we've seen a lot is crypto basis easily being the first trade that a lot of these institutions are entering into the market with, given market neutral. But Coinbase really wants to bridge the gap where you have access to deep liquidity pools of crypto and the guardrails that you have in TradFi. And so we tend to see crypto being quite fragmented. So by building this capital efficient liquidity flywheel across spot, futures, perps, and options, we really simplify the barrier for entry.
Yeah, the historic, kind of capital inefficiency of having the three kind of markets or the products kind of separated was quite, odd, and having it in one place under, reputable, balance sheet and regulatory environment like yours is, of course, should have a positive impact in the market. Kind of moving on to a more broader question, kind of comes in two parts. I'll ask the first one, first part first. What role do you think options will play in deepening overall market maturity and institutional adoption in crypto?
So I think options will definitely play a very critical role. And TradFi options are larger than one delta. So when institutions allocate capital, they do so via hedging and they want to use options. Now, as crypto options liquidity scales, I think we'll see much more sophisticated risk management frameworks emerge, tighter implied volatility, and greater confidence in deploying institutional capital into the asset class that we're seeing from today. And so a lot of this is what we're trying to do by bridging the Coinbase brand with Deribit and scaling the audience that options reach right now and being able to also access this in the US outside of just offshore.
Yeah, the implied vol. I had a little history with the implied vol, and having that as a benchmark, or understanding implied vol as a benchmark for actual vol in the market is quite interesting. And markets such as yours provide data, provide liquidity, which then kind of distills into that. It's quite an interesting dynamic of markets, understanding underlying benchmarks. Oh, sorry, yeah, Karen.
Oh no, just saying, agreeing with you. I think there's a lot more for crypto to mature, and as liquidity scales, we'll see more of these things change.
Kind of, following that, and on that theme, one of the challenges of the development of liquidity is the fact that the contracts offered by various different exchanges are not fungible. All the contracts, different framework, therefore hard to risk model, particularly hard to net settle in a default situation. How do you think the market will evolve? This idea about fragmented and diverse liquidity pools does provide some opportunity, right? Arbitrage, particularly, is one dynamic of having fragmented markets, and yet scale, normalization of product, normalization of risk perspectives and data like implied vol and stuff like that. Do you think that it would naturally consolidate and normalize? What's your view on how and when the market evolves?
Definitely. I think if we even just compare to TradFi models right now, where we have multiple exchanges with contracts that aren't fungible, and you're looking at the top 1 to 2 exchanges, these are already taking 80 to 90% of market share. So similar to like what you see in crypto already, I think with Deribit having over 80% of the options market share, something that we'll continue to see, and will replicate what we already see in TradFi. I don't think there'll be much to change there, but I think the key differentiator between a lot of these exchanges and some that do grow bigger than the rest is really the capital efficiencies across all products to make it a one venue, all-stop shop, just given the fact that there's been Deribit historically having the largest liquidity in options, and then all these other venues with better liquidity in perps or spot or so on. And it's been quite fragmented, like we mentioned earlier. And so having the capital efficiencies across all products to have one venue and then also having liquid products all in one venue, I think we'll see what the same thing that we see in TradFi and have the same thing with the top 1 or 2 exchanges taking that 80 to 90% market share.
An element of that consolidation and that kind of holistic risk view is things like credit counterparty risk and having a balance sheet within a regulated, market or environment that is the US. And these kinds of things that people look at from credit counterparty risk point of view, they are relevant and to a certain extent drive consolidation. So I personally thought it was a fantastic move for your firm to kind of merge together Deribit and Coinbase. I think it was a good move anyway.
Yeah, and I think like just even what you said there, like why we launched the international exchange originally, like our offshore perps offering was because we are historically only US. Like US has been our bread and butter for some time now, given being like a US company initially. And so after everything that happened in the markets with FTX and everything there, we really saw that there was an opportunity for a trusted and transparent exchange offshore that had like the credit counterparty worthiness of Coinbase and things. And so that's kind of like why we even began our journey offshore at that time, and then now have grown to be more of a globally focused company than we ever were before.
Do you think there will be a credit risk premium for firms such as yours who are more trusted, definitely more transparent, in regulated environment that's much more, acceptable from a broad institutional investor point of view? Do you think there's going to be a differentiation there?
Yeah, I definitely do. I think like we're already seeing that change as firms that are like specifically like in the EU, like being able to support MiCA regulation, having like being first to market with a lot of these licenses and things. I think there's a clear like first to market advantage, and then as well as like for traditional counterparties entering the space, like that's what they're going to look at immediately. And need to have all of the regulatory standards, things like that in place, have the proper risk management operations in place. And I think we're being tested a lot in the past few weeks, specifically with what we've seen in offshore exchanges and just liquidations, how things are handled. I think the market still has room to grow and things like that. And so we'll definitely see a lot of that evolve. And I think there is some sort of premium at play for firms that have this already handled or are ahead of the game.
If we could dig down a little bit on that kind of theme, but into the kind of idea of the integration between the two, kind of spot and the futures piece, Coinbase and the Deribit piece. What kind of synergies do you expect there to be between the spot futures and options market under one roof?
I think we really want to make a unified platform for spot, perp futures, and options. So unlocking things like cross margin, portfolio margin, and then that enables capital efficient multi-leg strategies. That only just deepens liquidity, improves price discovery, so enables more efficient strategies, more strategies that involve derivatives. So like I said, like basis trade, then going down the line of more, I would say like strategic, as well as just advanced strategies in terms of larger funds entering the space. I think that's something that we definitely want to evolve into.
When we look at that and we look at what you're doing with the integration, can you share anything about Coinbase's approach to global market expansion, maybe geographical expansion, anything like that? Is this kind of something interesting you can add there?
Definitely. I think the US continues to be our bread and butter, like I said before, but the acquisition of Deribit, I think, really reflects the intention of growing outside of the US. So obviously, we launched the international exchange a few years ago. That was like our really big leap, I think. And then building like an expanding global leadership outside the US. And now Deribit is fully offshore. All business there is ex-US. So it just really reemphasizes the fact that we want to focus on global expansion. And then the fact that we're integrating the Deribit brand with the Coinbase brand to really turbocharge globally. So one, not just international markets, but then also bringing education to US markets on what they can do in crypto options, since Deribit is now would be a new player to the US, and then vice versa of really expanding the Coinbase footprint with the Deribit client base as well. So really our focus on is like growing and hiring outside the US. Is we've been building much more of a team in London, Singapore, and now Dubai expansion with Deribit as well.
Looking at what you've done and looking at what other exchanges around the world might do, how much do you anticipate that consolidation will happen amongst the top tier exchanges? or do you think because we still have this this odd regulatory environment where regulators still don't know quite what their asset class is and what their strategy is as a regulator, and there is these kind of clear differences between regions and particularly also countries. Do you think that will drive the market still being fragmented?
Great question. I mean, I think we may start seeing more vertical integration across exchanges rather than horizontal here. I think obviously as regulatory framework changes, things like that, depending on like licenses, like I mentioned, things like that, that who is able to obtain these, like the credit counterparty with all this matters, I think. So yeah, I think we'll see much more vertical integration here.
With this better clarity and this more considered or more evolved kind of thinking around the asset class, do you see there be a kind of clearer regulatory differentiation between spot futures and options in the US?
Yeah, I definitely do. I think we'll see clear regulatory differentiation over time. I think the US has historically treated spot futures and options under distinct frameworks. So the CFTC overseeing derivatives and SEC focused on spot markets that qualify as securities. And so we work very closely with both. I think in previous, we've offered our own hand at just proposals, things like that, on how to regulate this. And I think we're really excited about the way things are moving forward and to finally have guidance from this. But I think obviously there's still room to grow, and we're going to continue to work very closely with the regulators on this as we expand our product offerings as well.
And then it's kind of interesting debate as to whether, because crypto is new and they don't quite understand it, what it is, whether it could be just all under one of the two regulators, which would be super helpful, right? But anyway, this is wishful thinking. And lastly, when we look at the US, and it's gone from being quite a, of course, limited environment to being a very supportive environment, probably objectively the most supportive environment in the world at the moment, probably taken over some of the Asian regulator jurisdictions for its kind of flexibility and pro digital assets. Do you think there's going to be an arbitrage between the US and the other jurisdictions? Will they follow the US? And it's historically been the case in equities and fixed income. What's your opinion on this?
I mean, I think we're already seeing this shape, like the geography of crypto innovation. So, like seeing where crypto talent moves, where companies are relocating. I think we've seen that in the past few years. And so, specifically with jurisdictions such as the EU and Singapore, with a lot of crypto innovation moving to the Middle East, I think we've really seen this migration. And now we're seeing a lot of it, like I said, come back to the US, which is interesting. So, I think as like the EU and Singapore move ahead with clear frameworks, the US will need to also step it back up as well with this. So I think the US has taken obviously a more cautious enforcement-led approach previously, which we're now seeing shift under the Trump administration. And I think in the long run, we really expect like competitive pressure will just accelerate standardization globally. So yes, there might be this regulatory arbitrage for the next few years, but I think we will see that standardize in the long term.
Interesting. And so when we know again, when we saw this thing happening over the last 4 years, now I was based in Asia for a long time, you saw people from the States who would land either Caribbean, UAE, or the Middle Eastern locations, Singapore or Hong Kong being kind of four layers, much less so into Europe. Where, again, purely as a subjective opinion, where do you see people coming back from the most?
I would say like those that might have moved to, like, say, Cayman or had to move offshore or something like that for reasons, or those that had opened offices, like say, I think they're still expanding offices there, like in Europe now that we have some sort of guidance, but I think folks are more so building like a footprint back in the US. So, I mean, myself, I even moved to London as well as we expanded our international offering. And so I think there was just a lot going on internationally that the US was at that time missing out on. And so now, folks, I think that there's a lot more clarity, things happening. People are migrating back. But yeah, I'd say it's a mix of like offshore that have went to Cayman, BVI, things like that. And then also just migrating back from, say, London or Europe or things like that, that folks might have moved out to.
Let's take a slight turn and let's look at crypto exchanges versus traditional exchanges, CME, CBOE being the more relevant ones, but there are plenty, Canada, TRX, and other places like that. What lessons from the traditional finance exchanges do you think the crypto industry has yet to fully adopt? And which aspects of crypto kind of market design could traditional players learn from?
Yeah, so I think traditional markets do really well at removing counterparty risk from transactions. So that's something that crypto is still working on. I think something that we really focus on. I think the industry is focusing on as a whole more and more as more larger players like BlackRock, those that are entering the space and really growing. And something that crypto does really well is crypto brings 24/7 market access, instantaneous settlement, which I think we're slowly also seeing bridged with TradFi through the launch of like tokenized equities and perps. So the future here is really a hybrid stack. I think we'll see a combination of both, having like the strong counterparty risk of that you see in TradFi, and then as well as the guardrails that you really see in TradFi, and having the strong bridge between the two, while also accessing the great parts of crypto of 24/7 market access, and the instantaneous settlement that you don't have to worry about.
Purely as a subjective, opinion. When do you think TradFi goes properly 24/7 settlement trade life cycle and fully onto whatever stable coins they are? I'm not saying which one, but whatever they are. When just a guess, 2, 5, 10 years, when do you think?
Great question. I would say I think it'd be very bullish to say 2. I would say 5 to 10, on that, just given the fact that I think crypto has a lot of this stuff already built out. So it depends the route if TradFi goes the acquisition route or if they're going, building it fully themselves. I think that's something that, like, we're all working and waiting to see around and, like, trying to build the infrastructure that also TradFi can also build on. And so I think there is a lot of room to grow there, but I do think that we're at the inflection point where we are getting we are crypto's taken seriously by TradFi, at this point, and I think obviously there's still room to grow, but I think there are things being noticed and stuff that they don't want to be left behind in a way, but also still needs a lot of improvement on our side to have all the guardrails and things set up for TradFi to really access.
Yeah, interesting times. And this is again purely conjecture on our part. I always say at parties, it goes probably more likely that Coinbase would buy CBOE as the step at which that happens than CBOE buys Coinbase. You know what I mean? It's pure, like I say,
Yeah,
it's
yeah.
purely just
Well, we're on a rate of, acquiring this year, so
Um, as we look at those traditional exchanges increasingly in exploring tokenized assets, do you see convergence or competition between the two market infrastructures of, the regular equity, cadenced settlement trade life cycle and the one of tokenized assets, which should be so much more efficient and instant settlement? What do you think of that?
I mean, I think competition is really good. It's something that we welcome and encourage. And I personally see like TradFi exchanges taking tokenized assets seriously as a seal of approval. So like we are heading in the right direction. Um, like I said, it really takes a long time, I think, to build up the security and operationally 24/7 what crypto is built upon. I mean, right now, we recently launched in the US our 24/7 US term futures. And so typically, obviously, it's Sunday to Friday. And so this is something that we recently launched. And we obviously have the capacity already running a full crypto exchange and prime brokerage to do this. But I think it'll be a lot more for the FCMs and the prime brokers to be able to expand and do this and TradFi and have all those people. And also, do they want to have markets going 24/7? I think everyone says they want this, but also some people do enjoy the weekends off. And I think crypto like Bitcoin has become much more of a speculative asset on the weekends because there is no release valve in TradFi. So that's something I think we'll see how that plays out. But I do think we'll see much more of a conversion rather than like outright competition.
Yeah, and it's just super interesting stuff. And the other element of that, which is, much of the control and the risk and the financial accounting world is based upon an old idea of reporting and batch runs. And so there's an element of infrastructure where those components of the trade life cycle have to come up to speed and use AI so that you have risk and you have accounting cycles and journaling and all this kind of back end stuff, which is similarly upgraded, and there's an element of whether that can exist on chain because it's there to view, and you don't have to run batch and all this kind of stuff. But yeah, it's kind of super interesting for me, intellectually interesting part of our asset class. But anyway, you mentioned your perp futures, and so in that kind of debate or conversation between perps versus term futures, what do you think is driving the institutional appetite for perpetuals? Because clearly there is a compelling kind of interest across every persona type of investor. What do you think drives that?
Yeah, I mean, institutions really just go where liquidity is. So I think that's the one thing where the perps liquidity is much larger than term futures in one sense, and then also perps allow continuous exposure, so they can partake in retail impact of funding rates and get exposure there. They can leverage to a directional mood, collect funding ahead of events like the FOMC. So I think one, liquidity, and then also just the trading with the retail funding rates is a big advantage of perps that not yet the term futures offer, things like that. So something that we did launch in the US was our perpetual futures in the US. So they are a bit different than the standard offshore contract, but similar setup with a funding rate and funding fee that's paid hourly and everything. So something that we're definitely focused on bridging the gap between the offshore product and the onshore product, because obviously there's so much demand for the offshore, and that's really where we see most of the liquidity in crypto nowadays.
Correct me if I'm wrong on my history. Wasn't the perp devised as a purposeful means of not being regulated as a future? Is I'm remembering that correctly?
I think you are correct there. Yeah, and I think there's a it's obviously it's a bit different because it's direct access to exchange offshore. There's no um, clearinghouse, anything like that. Like you don't have the same setup that you do in the US with FCMs and DCMs and all the access there. But I do think, and eventually, like there is demand for perps in the US, and it's getting the right framework. So I assume that we'll obviously have to then go through the same regulatory framework that we do for the term futures. So it might look different, but it should feel somewhat similar to an offshore perp. But that's what we're trying to get
Right.
accomplished, at least in the US.
Right. Yeah, and then the debate, aren't they really CFDs? And if they're CFDs and term futures, but they all sit under things like ISDA or netting agreements or risk models, then does it really matter? So yeah, all interesting stuff. Let's talk about DEX platforms versus centralized exchanges and the kind of strategic kind of dance between the two. We see a growing sophistication of the DEX infrastructure. It's partly around UX. It's partly around credit counterparty quality. It's certainly around speed, settlement finality in a fast, but also kind of trustable and verifiable kind of way. And so the question is, how does Coinbase view its role in relation to DEX-like things? Are they competition? Are they collaborators? Is Coinbase a bridge between that world and the traditional finance world? Any view on what Coinbase might do with a similar, more on-chainy like kind of things? Any insights you could give us around that would be super interesting.
So we've been heavily focused on building our everything exchange is what we call it. So everything you want to trade in a one-stop shop on chain. Now, I'd say it's a matter of perspective, whether we want to be a collaborator and bring people on chain, but also want to be a bridge between a trusted security and self-custodial services. So I think we're really looking to do a mix of both, depending on like what you're looking to do on Coinbase or the client, different types that we're looking to service. So whether that be institutional or retail through base and through everything that we're offering in the everything exchange that we're still focused on really building.
What are you most excited about when we head into 2026? What can we expect from Coinbase Institutional and for growing the derivatives markets?
I mean, I'm definitely excited about the growth of the product suite as a one-stop shop. I think I've been here from the beginning when it was just spot only. Then we acquired US futures or US derivatives exchange, and then launching offshore perps. And then now with Deribit, I think we finally have the product suite where we can bring it all together and have this one-stop shop for institutions as well as retail. And so we're really focused on building out for traditional institutions, crypto natives, and our advanced trading platform for retail. So we have a lot coming in the pipeline in terms of product updates that I'm really excited to be launching, and then as well as just the opportunity for bringing a lot of these new clients into crypto and having Coinbase lift that barrier of entry. So I think a lot there just in terms of the whole Deribit migration and integration across Coinbase as a whole that's super excited about, and I think a lot more to come.
Yeah, super interesting times. We're very much looking forward to seeing Coinbase evolve and grow and do all of those kind of things. I think it's a very interesting time in the history of the financial services and financial markets. And with that, I'd like to say it's been incredibly interesting, powerful talking with you today. Really, thank you for sharing your expertise with me and listeners and viewers. And with that, and on behalf of LTP, we'd like to thank you for appearing today, and for our listeners and viewers to tune into these episodes. We're dedicated to bringing professional insights, because it's a great way to shine the light on this new, interesting, innovative product and marketplace. Wherever the markets move, we'll be here to kind of keep things clear and help people to understand. So with that, we hope to see you next time on the Clearing Spotlight.